right, real life. So yeah, hi everyone. Hi Sebastian. Hi Nastya. Yeah, and I was just passing the mic to you.
Yeah, thank you, Further. Hi everyone. So my name is Nastasia. I'm from the Humans team, and we are the demo day / pitching platform for Web3 founders. And it's super exciting to have you all here. We are having a new event called the TGE Q3 Demo Day, where investors meet projects that are launching their token within the Q3 of 2024. And well, we've received over 300 applications and picked 7 projects that are ready to showcase their ideas to you. And this demo day is actually a unique opportunity to discover and engage with some of the most promising projects and maybe even form some strategic partnerships. So yeah, I'm happy to have you here. And we are joined today by an amazing lineup of investors. We have Sebastian from EcoNow Fund. I see Craig from Let 48 Ventures. Hi, Ricardo from 14 Capital. Of course, Miko from Gumi Cryptos. Hi, guys. Nice to have you here. So small favor before we start. It would be great to see everyone's faces and make the experience more enjoyable. So if you can, please turn on your cameras. If you cannot, not a problem at all. And all right, so for the founders, just a small reminder, you'll have a maximum of 5 minutes for the pitch. And we ask you to respect other pitches' time. And some quick tips for our judges. During or after the pitch, please show a raised hand emoji if you'd like to share feedback or ask any questions. And if you just like the pitch and don't want to ask questions, provide feedback, you can show the heart emoji, and we'll also share the Calendly link and pitch decks in the chat, so you can go through them and book a call if you want to. And let me pass the mic to Sebastian, because we are ready to start. Sebastian, how are you feeling today?
I'm good, thanks, Anastasia. Nice to see so many familiar faces and some new ones, of course. Yeah, good to be co-hosting this event with you guys again. It's always fun to see all the different founders and then learn from the questions from the audience as well. So yeah, I'm Sebastian. I work at AquaNow. AquaNow, the parent, provides trading and payments infrastructure for financial service businesses who want to enable crypto on their platforms. And we do that kind of all over the world. But I work on our investment team. We've got 2 funds. One is like a digital lending fund, and then the other is a early stage venture fund where we write checks at the pre-seed and seed levels, mostly focusing on infrastructure, data and analytics, and then compliance technologies. But we can go outside of that and definitely have. So always good to hear from founders across the space. So yeah, I guess we'll kind of get rolling now. So just as a reminder, it's great to see everyone's face. So if you can keep the camera on, that's good. I understand that things come up, so that's no problem. Reminder, you have 5 minutes for each pitch. I'll keep a timer going here. Try to keep it to the 5 minutes. I actually hate having to interrupt people to say, hey, time's up or whatever else. So if you can try to self-manage, that would be great. And then of course there'll be links and chatter happening in the chat. So feel free to check there, and you can request meetings that way, or you can always reach out to whoever you're speaking with at Humans, and they can do that. Let's kick things off here. We've got HaloFi to start. They're the easiest way to save and earn with stablecoins. Killer use case in the space. So turn it over to you guys.
Hi, can you hear me? Okay.
Yep.
Yes.
Okay, awesome. I'll kick this off. My name is Rachel. I'm the founder of HaloFi. As mentioned, we are the easiest way to save and earn with stable tokens, and you can think of us as like personal finance meets DeFi yield. So we know that stable tokens have been one of the breakaway successes of the last 18 months. Demand and usage of them is really growing globally. But still, for many people, it's quite hard to find easy ways that they can earn and use them in the more kind of traditional way that they might build up savings with. And this demand for stable tokens, I think it's definitely going to continue. We've seen inflation hitting 33% in Nigeria, and even worse than that, in January alone, the Naira devaluated 38% against the dollar in just 1 month. So quite extreme devaluation going on, and we're seeing similar patterns play out across the global south as well. So we built a tailored stable token saving experience. You can kind of think of it as like marrying everything that you know and love from DeFi, the higher yields, transparent system, and funds and money that you control, with everything that you know and love from your traditional kind of like neobank or challenger bank. So you can set saving goals. You can track your progress towards them. So maybe you're saving for a holiday, a house, etc. We've made it easy to earn yield. We've got Aave, Beefy, Moolah, we're adding more. We've made it very friendly for crypto newbies. So we've done a bunch of user testing, run in-person workshops and user research. We've also made it easy that you can buy crypto with card or mobile pay. And we're one of the Opera Mini Pay partner dApps. So if you've not heard of this, it's basically it's the stable token wallet that the Opera team have built, and they're distributing out across their browser network, specifically focusing on sub-Saharan Africa. So we've worked very closely with the Opera team over the last year to be one of these early dApps in the ecosystem, and we're one of the 7 that are currently available in the app at the moment, and the only one that you can earn like yield on your stable tokens with. So quite an important partnership for us. Just to give you a bit of an overview of our roadmap, we launched this product back in November last year, announced as MiniPay partner. We launched Points and we launched on Base in April. We recently launched a multi-yield support. As the theme of this event, we're aiming to launch a token in Q3 this year. And off the back of that, we want to build out a token-gated UI for token holders to get an enhanced experience, and also a centralized exchange listings as well. So just a little bit about the team. We've actually been building together for 4 years. We had another gamified savings product that achieved over 450,000 transactions, 4.5 unique monthly users, 13 most used DeFi dApp across all chains, and helped our community save over 4 million worth of crypto. So you might be wondering, why didn't we stick with this product? The gamification was a lot of fun, but we wanted to build something that was more intuitive and easier to fit around our users' lifestyle. And it was very important for us to build something that was going to naturally get product market fit and not have to rely on incentives. So we've seen, since we launched HaloFi Save, it's had very strong growth, particularly the last 3 months, where we doubled usages in April, over doubled it in May, and we're actually on track to get close to 100% growth in June as well. So we can also see the volume saved through HaloFi on this graph, which is a nice up and to the right there as well. And we've had over 16,000 wallets deposit through HaloFi, and we have over 35,000 users registered with their email address in our system as well. So a little bit about the token utility. I'll keep it short because I know we're on a timer. So we basically want to give an enhanced experience for token holders. So this means a greater range of yield options, better APYs, token staking, and even the opportunity for us to pay for their gas in the account abstraction build. Obviously, we want to use the token for governance and to build out a DAO, particularly with like KOLs and key opinion and key thought leaders regionally, as well as using the token as a powerful kind of tool to grow and incentivize community. The team, my background has been in development and DevRel, working for a number of Web3 and also Web2 companies, so List, Ceramic, and Twilio. Francis, experienced developer and project manager, both in fintech and Web3 as well. And we have Precious and Adam, who are growing the community on the continent, and Rose and Lucas, who are developers for us as well. We previously raised a pre-seed and a seed round. So most recently in March 2022, on our cap table, we have Longhash, Arca, State Capital, as well as a number of angels, including Sandeep from Polygon. We are now raising a strategic round. We're raising 1.1 million. We're actually keeping the valuation the same as our raise in early 2022. And that's just because obviously we recognize that the market has changed since then, but we've pivoted successfully and we've got strong traction on our new products. So wanting to kind of come something that would be fair for our investors, and also recognizing the success that we've had. We are due to TGE in Q3 this year, and it's a 5% of token unlock at TGE and a 24-month linear vesting. We want to keep building a product that's excellent, so hiring product talent. increasing awareness, so marketing and budget for that as well as the kind of centralized exchange listings as well. So that's really the goal with this raise. And yeah, that's it. You can catch me on Telegram, Rachel B London, or through Anastasia if you can't get hold of me directly, or rachel@halofi.me. Thank you for listening.
Boom, nice. Good.
Seb, you got muted, sorry.
My bad. I thought I hit the mute button. Thanks, Rachel, for keeping that one on time. Nice pitch, clear and concise, and within the time allotment as well, which is always fantastic. And pretty impressive traction, I must say. I'll turn it over to the audience to see if there's any feedback or Q&A.
I was
I
just
have
wondering
feedback.
what you had in mind for, I guess, KOLs or partners. I'm not very familiar with the best kind of partners for this kind of thing. So just curious, like, what your strategy was.
So I didn't quite catch that. The KOL strategy for the
KOL
token.
or partners. Yeah, like who would you kind of get that you feel are strong locally?
Yeah, so we have a number of connections through, we're part of Yosef Aili's Magma program, and we've been out in Kenya running that. So we have a few kind of leads through that, and we're kind of building out the expertise for that KOL platform. No one I can name specifically, but we do want to have some KOLs based sub-Saharan Africa where we're getting traction at the moment.
Thank you.
Yeah, feel free to ask. Yep, go ahead.
Yeah, I was wondering where does the yield come from? As you say, the idea is that it earns also in stable. So, could you be a little more specific on where the yield comes from? What does the protocol do? And if it is based on DeFi strategies, what's your plan for the bear market? As we have seen, when the bear market comes, DeFi yields go extremely low.
Yeah, so our yield is coming from DeFi protocols, as you mentioned. So we're using Aave, Beefy, Moolah on Celo, and we want to we've built out the front end and a lot of the back end infrastructure to keep adding to that. A good question about a bear market. So I think there's a certain proportion of our community that will always want to get hold of USD peg stable tokens. So getting any yield on that is kind of for example, if you're in Nigeria, that is definitely a bonus. But we actively want to bring on board more kind of real world asset protocols so that we can actually tap into, things that may have underlying value from, bonds, etc., that can actually be more resilient in a bear market situation. So that's where we see kind of the maturity coming in terms of the yield.
Okay, thank you.
Maybe one more, and then we'll keep it moving.
Yeah, we have Mike. Please go ahead.
Yeah. The pitch was nice, and I really love how you made it brief and informative. You covered almost all topics, but I would be interested in learning a bit more about the approach in a tech way you have, because it's quite competitive market, and it's interesting to see how you approach this industry, how you outline from competitors, and what technology you have to generate that yield and be interesting for just retail audience. Yeah, thank you.
Thank you. Yeah, so as I mentioned, we aren't actually building out the yield smart contracts ourselves. We're tapping into DeFi yield that's out there. We're continually researching that, etc. But I think really where our edge is kind of more in the application layer. So building out these features like goal tracking, making it more relatable and easier to use. So this is kind of where the value add of HaloFi is. I think you can always go to Aave or Beefy directly, but I think for the majority of people who aren't already deep into the space, this is not the best user experience, and they want something that's going to be more straightforward. We'll be adding account abstraction, so it's basically a Web 2 style login, and we're going to be hiring more extensively in product to keep building out a very user-centric application.
So, I know we want to move on, but I just want to give a tip that kind of may help everyone. Obviously, I come from the more Silicon Valley culture. I'm from Gumi Crypto's capital. you know, 4 out of 5 folks here in California. So, you know, my perspective is don't put valuation on any slide, and don't even say a number. Like, it just, to me, like, the thing that's bad about doing that is that it isn't how we play the game, right? Like, the way we play the game is we say the valuation set by the market, right? So like, as soon as you say a number, to me, it signals that you're playing a game other than the one that we play. And I think that's not optimal. That's basically my advice, that it's advice that applies to you and others. To me, like, you know, it may be that you're working with a different type of capital, but I just feel like the Silicon Valley perspective is kind of become more global culturally. So I just think fitting those expectations is generally beneficial. So that's my advice.
Thank you for that. It's actually very interesting to hear that perspective. So I appreciate that.
Yeah, like it's just it's the kind of the game itself, and it's sort of like, you know, you're signaling that you're playing the game. So you're basically saying, you know, the valuation will be set by the lead, you know, even if it's a safe, because, you know, there technically isn't a lead on a safe, but you can still say, like, the market will determine what the valuation is. Right. And I think the way you get a higher valuation is you just create pressure. Like, you just, you know, you just build up demand. I have a bunch of techniques for that, but this is you know, a short comment.
Thank you.
Quite interesting. Super interesting. Yeah, it's actually funny. Like, I actually like to have the numbers on the deck because I see so many companies that it's nice to go back and be like, what were they raising at again? But no, I think you know, Miko's always got a valid perspective, and you know, his point on the Silicon Valley thing is legit. And maybe you know, when you're fishing around for that, it still makes sense to follow that strategy. So thanks, Miko. It's always good to get your perspectives. Let's keep it going. We've got Smoke now. So they help brands and content creators acquire and retain a high volume of users through UGC campaign tooling, powered by SocialFi.
What's up, Seb? Good to see you again. Happy
Likewise.
to be here. Let me go ahead and share my screen. Just give me a second. All right, you guys see this? Good to meet y'all. I'm Nicholas Hildebrand. I'm the CEO. I also go by the NPCEO as a game character on Twitter, running our gaming company. Like you said, we helped people to onboard thousands of creators in just a few clicks to UGC campaigns to support really any brand that has digital assets. Right now, we're pretty focused in the gaming world, though. Our team is pretty epic. We have worked with some awesome brands in the past, running our different agencies over the past 10, 15 years, including NASA and Post Malone. Happy to tell those stories on a one-on-one call anytime. But since we've gotten into this space and in all the creator agencies and different kind of marketing campaigns we've worked with our clients, there's a common thread throughout all marketing where brands are really just struggling to target, track, reward, and onboard creators en masse. And as KOLs become much more central focus for a lot of marketing campaigns, this problem has just exacerbated. Especially while trying to use data and track the metrics to ensure ROI and just getting your money's worth out of these creators, right? And as bots and AI have gotten involved, it's just gotten a lot worse as well. On the creator side of things too, the problem here is there's millions of mid-sized to small-sized content creators that just can't find paid opportunities. They would really love to find paid opportunities. How we're solving that is pretty simple. On the creator side, it's just a kind of campaign marketplace. Really easy to find a campaign, onboard, start making content, and be guaranteed that you get payment out of an escrowed reward smart contract proportional to the impressions that you gain as a content creator on the desired platform. And for brands, we aggregate all of the creators into one place, track the metrics both on and off chain. We attribute that to creators so that you can more easily target creators that are going to move the needle for your brand. And then we automate both the distribution of that campaign to thousands of creators and communities, and also the distribution of the rewards for that campaign. The opportunity that we're seeing in gaming specifically right now, especially in the Web3 space, there are Web3 games hitting the market right now, finally, that are playable and need to onboard Web2 gamers with wallets. there are gaming content orgs from Web 2 that really struggle to monetize their brand, but have massive distribution, have thousands of content creators, have tens of thousands of micro creators willing to make content. They're coming to Web 3 for this liquidity that is available here, but they don't really know how to onboard to campaigns. They definitely don't know how to onboard people to wallets, right? And so there's this major gap in between both content creators and orgs trying to monetize and Web3 games that really need to onboard them to their marketing campaigns. That's where we come in. We've pretty much just built our MVP to serve this gap and to fill this hole. So how this works is gaming brands put up reward pools that gets distributed across all of our creator partners. Right now, our MVP is run natively in Discord. As the platform goes live, it'll also have a centralized component in the platform, but gets distributed across all the communities and creators. They start to make content just as easy as posting on Twitter, using the right tags, submitting their link in the Discord. We track using the API all of the data, attribute that to each user, and pay them out proportionally to the engagement that they got in ratio to the all impressions in the entire campaign. So everyone gets paid, but people are incentivized to make more content, post more to try to get a bigger slice of the pie. So this is how we kind of ensure a lower cost per post for our clients. Orgs are in the middle of that by verifying their communities and their creators and offering a value add to companies through content moderation and campaign promotion. They earn a small percentage of what their creators make. Also, the creators' skill sets get verified on chain, an SBT that tracks kind of how they performed in the campaign, both on the desired platform and on the actual like claiming of rewards and on-chain asset side. When the platform goes live, we will have more of a kind of social-fi element. I don't like calling it that, but basically a way for us to acquire supporters and users outside of creators to come and support creators, earn rewards on the platform, and spend points on a battle pass system and earn Web3 gaming assets. This is how we expand the distribution of Web3 gaming to just Web2 gamers that support their favorite content creators. We've already got some traction. We've ran campaigns with a lot of the biggest games in the space. So Shrapnel, Everreach Labs, we got stuff coming up with Haven's Compass. We're Treasure DAO distribution partner. I think we're, about to run some campaigns with Revolving Games and a few others. With these campaigns, we've seen some awesome success. So Shrapnel, for example, they put up $18,000 reward. We had 600 plus montages made. They did over 2 million impressions on X. That came out to about a $25 per post for creators. And with all of those impressions as well, it turned their playtest, which is typically behind closed doors, into a viral marketing campaign on X in December, January timeframe. We've done these campaigns with a couple other brands. This year, we've done about 80K in revenue. I'm just going to pop over to that slide, actually. We've done about 80K in revenue this year to date. It's a little bit more hands-on currently as we're managing a lot of these campaigns with the clients, but still using the Discord bot to just make it easier on us. We can scale this up pretty high as is. As the product goes live this summer, and we have a couple other products going live alongside it, we're expected to do about 750K this year. Just pop back. Some of our partners, just big creators in Web 2 and Web 3. Some really big Web3 brands that we're working with, as well as some Web2 content houses that are distributing campaigns to their communities. Just quick note on our ecosystem. These are the brands that we have running kind of alongside our company that we've had running for many years, and they really just kind of funneled into Smoke and increased the value of our product by bringing talent to Smoke and by bringing brand deals to Smoke as well.
Thanks, man. We'll probably have to wrap it up.
Okay, am I done? Oh yeah, please wrap it.
Yeah.
No, we're good. We're good.
Awesome.
We can end it there. That's fine.
Awesome.
Yeah.
Thanks for playing with the rules there. Okay, so turn it over to the audience for any questions or feedback.
Yeah, I wanted to briefly say that I'm your client tomorrow if you're available. Let's talk.
Let's talk.
A lot of intelligent content on our investor startup collaboration platform, so it has to be smart, but if you can provide that like IQ of the user content generators, then we can discuss.
Yeah, let's do it. Yeah, please book a call.
That's amazing. I'm not sure if I've seen that before on one of these, but that's fantastic. Love to see the magic
yeah,
happen.
I'm not gonna lie. I mean, the pitch has been a no-brainer for every single company I've talked to. I've been extremely happy to see it. So this makes sense.
That's awesome. Anyone else?
I guess for me, just real quick, like just going back to 500 startups adage, like if you have traction, start with traction. I think starting with team,
Nice.
like it's good, but I think that it's better to, if you have traction, start with traction. And then I think team first is sort of a signal that it's early. So if you go team first, it signals that you don't have anything.
Okay.
So that's my kind of I'm a kind of a, because I'm really interested in kind of the Sequoia template, I'm really focused on ordering because I do know that you can change the order, which gives you more storytelling flexibility, but there are certain orders that send certain signals. So I think team first isn't the best signal. So just want to give that advice.
I appreciate that a lot. I had actually watched one of these pitches with some of your feedback saying to go Sequoia. And at the time I was totally not. So I had restructured more Sequoia. And then I had an advisor go, hey, you need more narrative storytelling in here. So then I had switched it up a little bit there. And actually the last pitch I did with humans, it felt much more story driven. And we've had just so much progress. I've changed the deck a bunch since then that it's definitely out of order now. So thank you for that feedback. I'll definitely switch it up.
Yeah. I mean, it's always difficult because you get radically different advice from different people.
Yeah, guaranteed. It's an iterative process. I'm pretty burnt out on this deck, not gonna lie.
Well, we have a question from Ben. Ben, please go ahead.
Hey, Ben.
Hi, Nicholas. So you're raising 3.5 at what val are you raising it?
Yeah, so there's kind of different tranches here. For equity, it's 10 million post money.
Gotcha.
Yeah, so the 3.5 includes tokens too, though. So we're really only trying to sell like 500 in equity.
And what KPIs do you think are critical for you guys to hit to make it sustainable in the next 3 to 6 months?
Sustainable, like we're already there. As far as scaling up and getting to where I want to go in the next 3 to 6 months, I'm aiming for 50,000 users on the platform, monthly active. Yeah, and then I just have a couple big activations upcoming. Mainly, right now we're pretty focused on a Twitter native UGC campaign for our own brand. Definitely, like we're keen on the space. We've been builders here for a long time, and so we're going pretty like degen with this Twitter go to market. So highly focused on that. That's going to be a big rev generation event in its own right. And then that will lead into the platform launch. And yeah, I for me, like 50,000 users, I'd like to be distributing couple 100,000 in rewards every month.
Yeah, we should hop on a call. We might have like 2-3 portfolio companies that this might be interesting for. So
yeah, please, let's do it. Thanks, Ben.
I love it. Pitch day and BD exercise all in one. Fantastic.
Yes, sir.
So that's great. That's awesome. So just a reminder, you can book a call with Nicholas or any of the startups in the Zoom chat, or of course you can reach out to Anastasia and she can help you out as well. But yeah, I guess we can move on from here. Thanks again. So we'll move to Squadify. It's an on-chain copy trading protocol that enables users to copy their favorite crypto investors' trades with one click. So we'll turn it over to you guys and get going.
Sure. Hi, everyone. Can you see my screen?
Yes, sir.
Yes.
Great. So hi, my name is Igor. I'm CEO of Squadify, the first DeFi copy trading protocol that allows brands and communities to engage their users in a copy trading and helps them to copy trade their favorite crypto influencers with a single click. Sorry, it's not. Okay. So I'll tell a little bit about us, the team. So I have more than 12 years of entrepreneurship and international business development experience. And together with Stan and team, my co-founders, Stan have fantastic experience in brand marketing. Last 2 companies before our previous company went public, where he was brand director, and team was leading the teams of software engineers in fintech. Previously, we've built a company called Pure Finance that we scaled to 100,000 users, and it was a social investing app for influencers where they were selling their investment strategies, and users were able to copy trade them through an SEC registered investment advisory vehicle. And why I'm telling you this, because we had a chance to talk to, we scaled it to 100,000 users, as I mentioned before, and now this company is under acquisition. And we had a chance to talk to our users, and they told us that they have a lot of problems in terms of DeFi space. They're struggling to know what to buy and when, because the space lacked transparency and trust compared to traditional finance market. And there's a technological gap in not allowing them to rapid market participation. On the same side, top tier DeFi traders, they struggle to legitimize themselves and to monetize their expertise because the space is full of different scammers, and communities which are hard to navigate in. And we all know that by now the market is massive and it's keep growing, and we're targeting to the market is massive, and we're targeting to get a good chunk of it. And we came up with our users. We came up with a solution to build the first copy trading protocol that allows users to copy their favorite influencers. But what's more important, what we realized, that it allows brands and communities to engage their users with copy trading. What does it mean? We talked with decentralized exchanges, wallets, and KOLs, and now we're providing them a solution that they will they will integrate into their companies and give their users this new social layer of engagement in copy trading, with leaderboards, with opportunity to compete with each other in different trading competitions. What's important, we also provide the transparent way to find the actually performing traders on a platform utilizing on-chain data. At the same time, we give the opportunity for KOLs to monetize their investment communities in a new way. We're already in the conversation with a few KOLs who are managing their Telegram chats, Discord communities, or Patreon. We're targeting a massive market, as I mentioned before, and our goal is to capture 5% of a retail trading segment, and we're making 25 BPS for per transaction, and we targeting $850 million market. We know competition pretty well. There are not that many companies that right now targeting this copy trading part of the on-chain copy trading specifically. We have pretty good traction. We are bootstrapping this product since January. We built an integration with Zerion Wallet, with Coinbase. We developed a special token system. We actually built the copy trading smart contract and the protocol on the back end. And recently we started signing the LOIs for the potential integrations with future customers. We signed the LOI with the wallet who has 1 million monthly active users. And we're working on integration with lending protocol, which will allow us to utilize the data that we're getting from the wallets that's connected to our protocol and provide them with different lending and borrowing offers. Our business model is pretty simple. We're charging 25% basic points on each transaction. And the token utility is also straightforward. When somebody wants to start copy trading the wallet of another person, we're creating a separate wallet that's connected to our smart contract and protocol. And in order for smart contract start executing automatically transactions, there should be allocated up to 5% of the assets in this special wallet will be allocated in the native token of the system. So imagine when we connect to our partners, the more wallets connected to the protocol, the more distribution of the token will be. We're raising $500,000 safe round. It's our first round, as I mentioned before, with Bootstrap. And with the goal to, we're launching incentive system for our users, building first integrations. And the goal is to present fully working first integration at Singapore and raise the new round then. Thank you.
Boom, another one, almost perfectly on time. Thank you for that, Igor. All right, turn it over to the audience here. Any questions or comments for Squadify?
I guess I can start. Hi, I'm Angelo from Hardcore Capital. And to me as an investor, I'm always looking for a why now moment, right? And the why now could be something in the technology, it could be something in the regulation changing, could be something in the market structure changing, right? Yeah, but that's what I look for when I'm making an investment. And I would love to understand what the why now moment is for what you're building.
Yeah, to be honest, why now? I think, of course, everybody's talking about the rapid market growth. But I do believe that we have a lot of infrastructure, and people looking for a much simpler way to get into the DeFi space, to get into the investing and trading. And that's what we provide. We provide an easy access to like normies, all right, and everybody else, so they can actually start investing in validated strategies with like few clicks, which will help us to grow, because I do believe that we have like there's a lot of room to build more infrastructure, but I think the time has come. And we actually spoke with decentralized exchanges and wallets. And when you come to the trading platform, like any DEX or any wallet, they lack this social layer, and that's what we provide to them: the engagement between the users of the platform. Because when you come to the wallet, right, there's nobody else except of you, or to the DEX. And now with us, there's a leaderboard, there is a trading competition, and there is opportunity to find somebody who looks like they know, right, what they're doing.
Great, thank you.
I did write this in the chat, but I just want to clarify, right, which is that the game of early stage investment is very, very, very like runway versus traction, right? And so your traction slide is confusing because it has roadmap and milestone delivery in it, which, you know, of course you should be proud of, and it's nice. But to me, it's concerning because you really, really have to focus on product market fit and evidence of demand, right? So to me, like, you know, any signals that are not focused on that are not traction. And so, you know, so to me, like, that was a concerning tell. Like, so I was a little worried, you know, because I really want kind of a laser focus on proof of demand. Like that's my, you know, so to me, like, it's more a mindset signaling issue. So
thank you so much, Miko. Don't you think, just a question for you. So we have a lot of conversations with potential integrations, like, right? We're signing letters of intent with the wallets, with DEXs, with other protocols.
Yeah. I think
is it like, that's the question, right? Is that good to show? Like, is it attraction in terms of products?
So I think this, right, which is that, you know, it's definitely validating. I do think B2B traction, like logos, like it's definitely, so to me, like they're integration centric businesses that are primarily gated by things like that, right? So if you have, you know, if you're a B2B integration service or a B2B software company, obviously those partnerships are key with respect to establishing traction. You know, I do think this, right, which is if you have distribution partnerships, that's really interesting, right? And I think all of those can qualify as sort of demand proxies. So I think you can include them in traction indicators, right? But I definitely want to make sure that that's as crisp as possible. But yeah, I think that's just my comment. I usually try to comment in a way that, you know, like multiple startups can kind of get ideas. So, you know, it's not, some of it's just using your pitch as sort of a stimulus to talk about an important topic. So, you know, I don't think, you know, it's I think a couple of adjustments would make it easier to look at that slide. There isn't a specific Sequoia slide called traction. So sometimes I like to combine it with the product slide or other Sequoia compatible slides, because I'm definitely a fan of, like, if you have traction, show traction. So that's good.
Yeah, so that was the goal, you know, combine things that we already built and that we already started signing letters of intent.
I'm a fan of putting roadmap even past delivered roadmap on the financial slide and using it as the ask, I did say that instead of saying the valuation of what you're raising at, you can say the amount you're raising, right? And so the best way I've seen it to do it on a last ask slide for financials is you do a timeline. You say, we raised this much back at this time. We delivered these milestones. Here's the traction level, right? Here's what we're raising now. And then here's our plan for what we'll raise in the future. So if you show a financial slide like that, that's an eyeful, but it's super powerful. And it's powerful because it's like, we took this money, we built this stuff, right? Now we're going to take this money and then we're going to build this stuff, right? So then that whole syllogism is one that makes investors feel kind of like you're organized and and to me, we took this money and delivered this stuff makes the story of now we're going to take your money and deliver this stuff more believable, right? So that as a function, so there isn't an ask slide, but I use the financial slide and I typically put runway in there because I just feel like I put milestones. So I put past, present, future in there, and that makes for, I think, a really punchy way to end. Some people have the financial slide be overly simple where they're just like, we're raising, 5 million, and then maybe they put the logos of their previous investors or something. That's I think there's a chance to communicate something really meaningful in that slide because it's really about making and delivering promises, right? So I think that's a good format for that type of thing. So if you want to take some of those roadmap delivery items and put them somewhere, that's a good place to put them.
Thank you so much, Miko. There, like one quick answer. I saw the question: what's the unfair advantage? I do believe that among all competitors that we see in the market who's in this space, our major advantage is that we are not targeting. We are the protocol where most of our competitors in this space, they are targeting B2C clients. So we already talk to KOLs. We don't need to chase KOLs. We actually provide them the tool to monetize their audience in a new way, that they can re-engage their audience in a new way. So I do believe this one of the big advantages, rather than most of the products in the space are B2C ones. Yeah. And thank you so much for your questions and for your time. And Miko, was great seeing you yesterday in the House of Web3.
Thanks so much.
That's awesome. Ben, did you still want to ask a question or should we keep it rolling?
I think I got some of my questions answered, so it's fine. It was more like on kind of what operational experience do you guys have on BizDev? Like you were saying, like because you're acquiring these KOLs that kind of like do represent customer acquisition for you. Like I would be wanting to understand more about your experience in customer acquisition, retention, like operationally, and because you're targeting in this way, like maybe even more important, like BizDev. Right, like actually curating those relationships and keeping them active, because that's a big risk, right? Which I would be looking at.
Yeah, absolutely. So regarding the customer acquisition experience in business development, as I mentioned before, for the past 4 years, we're building a social investing platform in traditional finance space in the intersection at some point with the Web3 space. So we mastered the way how to utilize the content of the content creators for if you need for B2C side. But coming back to B2B side, I have experience for like 10 years in business development, being like head of business development and partnerships in different companies. And so we have this experience. Just quickly, without diving deeper, we can just schedule a call and dive deeper into this.
Don't you think those KOLs do not behave like traditional how you would consider a B2B? I think like from like a profiling perspective, like they more like have the persona of a B2C like relationship anyways, right? Because they're not sophisticated enterprises, right?
Absolutely. That's why there are different categories, right, of integrations customers for us, B2B customers. As I said, they're like companies and communities. By communities, I meant KOLs. There's a special type of relationship with them. Obviously, they're like require special approach, I would say.
You should
from-
consider, yeah, sorry for interrupting.
No, no.
You should consider some type of like staking like mechanisms where you kind of like increase the stickiness and like there is some delay for them to leave to competitors. I think like that's when someone sees you're getting a lot of traction, someone's gonna just attack your user base immediately. So you want to create something that kind of like creates the stickiness there, I think.
Yeah, would love to.
Oh man, so good.
Talk more about it. Thank you.
Yeah. Let's continue it offline here. I hate interrupting a nice organic conversation, but we do have a bit of a schedule to adhere to. So sorry about that, guys. So yeah, next up we've got Stable Finance, a capital efficient Web3 money market. Over to you guys.
Sorry, lost my mute button for a second. Can you hear me?
No worries. Yes, sir.
Cool. Hey, I'm Ryan. I'm the head of product at Stable Finance, filling in for our co-founder who was in transit. We are an AMM or a DEX focused on FX stablecoins and RWAs. Start with the market opportunity. The global FX market is large, the largest out of all. 60% of it is dominated by USD, 40% in trade. That's compared to the stablecoin market, which is a lot smaller, only still large, but smaller with 1 trillion monthly transfers, but 99% of it is dominated by USD pegged stablecoins. So our kind of aim is if we can capture just a portion of that growth over the next 5 years, we'll be successful. And we believe that stablecoins and RWAs are the largest addressable market in crypto moving forward. Stable originated as a problem, in particular from within the non-USD stablecoin community, as a clear need for a vital piece of infrastructure, mainly swapping FX stablecoins, for example, euros to USDC, the NZ dollar stablecoin to the Turkish lira. Each issuer needs a simple and easy accessible swapping facility for their product and a place to put available liquidity and generate yield. At the moment, generalized AMMs like Uniswap and PancakeSwap do not fully service FX stablecoins and RWAs because these tokens, the majority of their price discovery occurs off-chain. So they don't provide the best price and they leak profit to arbitrages in the form of impermanent loss. Earlier iterations of non-USD orientated DEXs have suffered from exploits and lack of traction and failed to address issuer and stakeholder needs. So our solution is a automated market maker that's focused on non-USD stablecoins and RWAs. It's primary innovation is it's optimized. The bonding curve is optimized for low slippage swaps and capital efficient liquidity provision by using an off-chain oracle from Chainlink to center liquidity around it. And yeah, it's a platform built for issuers by issuers. Our biz dev team are like constantly engaging with new issuers and existing issuers to make sure their needs are met. In terms of the AMM itself, so most AMMs, such as Uniswap, are a constant product bonding curve. They spread liquidity across all price opportunities. Whereas this is like a hybrid invariant where there's a flat section in the middle where liquidity is centered, providing low slippage close to an oracle price. And of course, this helps with price improvement for traders. It reduces impermanent loss for LPs because the price on the AMM doesn't have to wait for arbitrages to move the price. The liquidity is shifted dynamically, and it also provides peg pressure relief for issuers. Our, I guess, go-to-market strategy is a lot of partnerships and integrations with new and existing Web3 apps and neobanks. We do have our own interface, which is operating now, but we don't see that as the main driver of volume or TVL. We want to, well, initially integrate with the biggest DeFi aggregators, as that's like an obvious and easy way to access a lot of volume. We just have to provide the best price and we'll gain customers. On top of that, things like neobanks, card providers, point of sale, and yeah, any Web3 apps providing P2P, cross-border payments. There's a definite need for a on-chain and permissionless protocol to swap FX stablecoins. In terms of what we've listed so far, we have Eurostasis token, the pound token, the New Zealand dollar stablecoin, and the Bilera. We're launching a few other stable tokens soon, and we're in conversation to bring RWA issuers their own pools as well.
Hey,
Just
Ryan,
quickly
sorry to interrupt. Yeah, just maybe kind of get towards the wrapping up part here. It'd be great. Thanks.
No problem. I've mentioned the competitive landscape. We are filling a $3 million raise, which is about 300K left. We have existing investment from 66 Capital, Black Green, Type 3, Algo DAO. And yeah, would love to hear from you.
Yeah, I'd like to actually say that it's a very interesting problem and opportunity. I live in Abu Dhabi, and I know, like, I'm in touch with people who work with within like sovereign wealth funds with different governments, like what Abu Dhabi does, and the Emirates. They usually include the DeFi infrastructure into their economic treaties with like African and Asian countries to help those countries like set up their digital assets infrastructures. So what you're doing is like very in line with the future, and like what big boys are doing. I'd love to talk in greater detail sometime soon.
Cool, thank you. And yeah, we have been talking to issuer for the Nigerian Naira stablecoin. And I know there is a lot of like cross-border and remittance Web3 apps in Africa, but thank you.
Yeah, I have friends of mine who are also like starting to manage a few sovereign wealth funds in various African countries. So it's relevant. And I know they do have this need for stable coins.
Cool, thank you.
Amazing. More BD. I love it. We should have to rebrand these, Anastasia. But yeah, any other questions or feedback for Ryan?
Just a really quick tip. This kind of BD stuff is super, super helpful for investors, and investors are always doing diligence, right? So one of the things is if I do take an interest in an opportunity, there's sort of a twofer in me making an introduction to a customer, right? Because the twofer is, one is I get free diligence from the customer, right? And then the other twofer is that I've signaled helpfulness. So like, it means that the entrepreneur is like, oh, that VC actually has already added value. So like if a VC helps someone before there's an economic interest in doing so, that's a good relationship builder. So, I think that's a very frequent thing, and it's a good thing. And by the way, like if you ask VCs that haven't invested in you to make BD introductions, that's a good move on your part, right? It shows that you're focused on, and it shows that you care about the right things, and and you may get a you may actually get an investor to piggyback on the deal if you can close it.
Cool.
My 2 cents.
And yeah, I'm sure you had a lot of comments on the structure as well, but I have been listening to your other points, so I'll take those in.
Yeah.
That's
Cool.
awesome.
Thank you, guys.
Yeah, great. Thanks, Ryan. I guess we'll keep it moving forward in the interest of time. And so we'll move forward now to One-Click Labs, the gateway to DeFi with a focus on usability.
Everyone, good to see some familiar faces. Can you see my screen?
Yes, sir.
Just want to double check. Okay, cool. So, my name is Max. I'm a founder of One-Click, and we're here to make DeFi seamless and accessible. And the problem with DeFi, like obviously it's very lucrative, but it's also confusing. And as of today, there are at least 38 new DeFi protocols or layer 1, layer 2 chains launched every week on average. So currently we're looking at like north of 250 layer 1, layer 2 chains. It's like having 250 different app stores in your phone, and then we have more than 3,500 DeFi protocols and few tens of thousands of farming pools, which ultimately creates cognitive overload. Like, how can you keep up with all that information overload and keep up with the latest trends if you're just an average user? And like, this is how the average experience in DeFi looks like. Products are complicated, they don't pass the grammar test, there's also high risks. We know this stuff. Our solution is basically provide users a platform where they can find the best DeFi airdrops and yields and other different products, do their own analysis or diligence about its relative safety, how big potential there is, and also access these opportunities within just a single click zaps, no matter which chain they're on or which asset they're using, or they have a Web3 wallet or not. So we already released the biggest airdrop aggregator. By the way, you should check it out. Like, we have the largest database of airdrops in Web3, currently like north of 450 airdrop opportunities with a lot of interesting insights about each. We launched it on Product Hunt, got #1 product of the day and #2 product of the week. Got close to 300,000 users within the first month on this, and basically One-Click is more than that. It's an ecosystem where we're adding more features that are basically aimed at increasing usability, letting you as a user getting into the best DeFi opportunities straight from your banking, from credit card, without the need to make any Web3 wallets. We support 20,000 different pools from 50 different chains, allow you to instant zap without paying too much gas, and even get free transactions that you can earn within the same protocols in DeFi. But through One-Click, you can earn even incentivized and better yields. And market opportunity, I'm not gonna talk too much about that. We know that we're still early. That basically we're betting on the growth of DeFi and becoming a multi-trillion-dollar market. And when it does, people will just be flocking into the space, looking for platforms like One-Click that will give them seamless and accessible gateway to this ecosystem. As of the latest traction, I mentioned the launch on Product Hunt. We got some grants from the top blockchains in the space like Solana and Arbitrum. We built a loyal community, and we got some awards on offline events like Paris Blockchain Week and WoW Summit. B2B integrations is actually one of the major marketing channels for One-Click, and we plan to distribute and get users from there and we have a pretty big projects in the pipeline. We're integrating with Nicegram, which is a social fi app with more than 30 million downloads in App Store. We got Koinami Koala wallets with cumulative more than million monthly active. We got AlphaBot integration going, Cointelegraph in the pipeline, and a few more coming soon. As of the team, we have Amro, who is expert in marketing and operations, been there, done that, grow million low carbon startups. We have Ben, who's the head of AI, who's been in the space for 7 years. Got James, research, who's been farming airdrops pretty much since 2020, 2021. And myself, I've been in IT product development pretty much for all my career. Been in crypto since 2017, managed a crypto hedge fund with close to 12.5 million AUM, and made a lot of research on the Web3 and tokenomics publishing. So we're currently at 2 million pre-seed. We closed a few deals with reputable backers in the space, and obviously got some grants from the blockchains, and we're looking for the like-minded partners to help us bring the project to the next level. So if if our mission resonates, feel free to reach out on Telegram, email, or via these meetings. Happy to take any questions.
Boom! Almost right on strike on schedule too. Thanks for that, Max. Any questions, comments, or general feedback for OneClick? Miko, you've been typing stuff in the chat. You can vocalize that if you'd like. Or,
yeah, I'm happy to do so. So one of the things that I think I do want to emphasize on this one, really for the benefit of all the entrepreneurs in the group, is that to me, one of the things we really measure is something that when I say measure, it's really an unquantifiable thing. So I think it's a little foolish for me to say, but it's what I call mojo. Right. And part of the way we measure mojo is we really look at both facial affect as well as vocal inflection. Right. And part of the thing we really like to ensure is that when our entrepreneurs pitch, that the vocal inflection is very declarative. Right. And what I mean by that is like really the sentence that reflects the ideal vocal affect is something like, this is going to happen. Right. So that sentence, the way I toned my vocal affect is really, that's a good energy, right? So in terms of the way that you sort of typically pitch, I think it is valuable to really make declarative sentences and to have a definitive and declarative vocal affect. So I think that's valuable, and I think that to me, when I say mojo, the thing that's important becomes that there are forward-looking statements, and then there are things that you've delivered, right? And so that combination is really about sort of the things you did make happen and the things you want to make happen, right? And to me, the kind of energy and momentum and conviction can be communicated, from a emotional, vocal, facial, right? So the reason why I emphasize also in the chat room your lighting is that your lighting prohibits us from seeing your facial affect. You can see it now, like you can see your face now, but previously we couldn't see your face, right? And so, that prohibits us from reading how definitive you are and how, and obviously then we're falling back to your vocal affect, right? So to me, like that's an important variable. It's not something a lot of people maybe think about. One of the things I do see that you didn't have is the rising inflection, which is definitely not awesome, right? So the rising inflection is you turn statement into a question, right? So that's not you. But that's one that I do.
I'd love to add to this. I'd love to say that that although I also measure these things, I assess them totally differently. To me, if a person is without all these vocal inflections and stuff, it's a good indication that I'm probably listening to a real nerd who may probably like fail at the human sales, but has his like life strategies around like building products and building systems that make money.
Yeah. By the way,
so I'm like,
by the way,
this dull person may be like my fit and be within my
yeah. So I love what Ian is saying, right? Which is one of the things I'm promoting is generalized pattern matching, right? But obviously entrepreneurs are pattern breaking, right? So for example, I listened to one entrepreneur that was almost robotic in her delivery. It was a female entrepreneur, and I did end up investing because as I was listening, my first thing was, so what happened is she got on the call, didn't say hello, immediately went to her pitch. The pitch was robotic. I invested. And what happened was I was carefully listening, and I realized that she had done this pitch 1,000 times. She was super tired. And I kind of tried to assemble a mental model of the entrepreneur. And I was like, this is an insanely hardworking person and an insanely tough and durable person based on other data points, right? So I was able, what I'm saying is that good entrepreneurs are pattern breaking. So to me, what I'm saying is really just kind of increasing your odds by matching an expected pattern. But I agree with Ian, which is investors are subtle and ideally they're more clever, right? So ideally they're not just like, pattern match invest, right? Like it's like Y Combinator throw check, right? Like it's not that simple, right? But you know, but I think you can boost your odds by like being declarative and definitive. So that's my 2 cents. But I like
probably it's good to match that to like what investors you're pitching to and like what their style is and whether you want these investors.
I think the best possible thing is to really be as true to yourself as possible.
Yeah, that's right. Because then you will find the investor that fits you the best long term.
Yeah. I think that if you're, you know, to me, if you're meant to be doing this, like you'll absolutely find the fit. Like, you know, and you know, a lot of what I'm saying is probably will come out in the wash, right? As long as you're really, really sincerely
it's really interesting, Miko, because you're so right about how important these things are, but I'm more attentive to the pitches where the like the pattern of these founders are really like the nerds who don't know how to speak versus like people who sound well. I'll be like, nah, these are like salespeople, probably like people oriented. They know how to like navigate stuff like that.
Yeah.
Who's to say you can't be both?
Are they the real like?
I know we probably have to move forward. So you know, just my last comment.
Who's to say?
It's easier to teach an entrepreneur sort of pitching technique rather than how to build great software. So, you know, I respect that a lot. Thank you.
Yeah, no, that's great. And unfortunately, yeah, we do have the time deadline. But you know, you can be a good salesperson and a builder at the same time. But you know, maybe we'll have to pitch humans on having a bit of a roundtable to get Miko and Ian to you know circle back on some of these ideas because it's quite interesting. Thanks, Max, for your time. And of course, a reminder to everyone, you guys can schedule a meeting with One Click. On the chat or with Anastasia. So moving on to Amulet Finance, cross-chain leverage with self-repaying loans and on staked assets.
Hello. Firstly, can everyone hear me? This is Robin.
We can.
Yes.
Awesome. Sorry, I'm just having a few technical issues with the sharing screen. I think you should have full screen view now. So it's a great pleasure to talk to you. I do not know whether to sound like a nerd now or to sound incredibly confident, but I'll do my best just to sound like
Depends
myself.
whom you want, Miko or myself.
Both. I'm here to talk to you about Amulet. We feel it's a really exciting novel protocol, and we're about to launch on mainnet in the interchain, but we have a vision of enabling cross-chain leverage in DeFi across multiple chains with self-repaying loans. So what is the problem and why is Amulet the solution? The problem is that crypto has so many promises it's made to be exciting, frictionless, and efficient, and give normie users efficient tools for finance that aren't available to them in TradFi, perhaps only available to the 1%. And you really want to be able to borrow against your assets rather than just spend them, because otherwise you end up not getting exposure you want. But unfortunately, whether you're a complete newbie or you're Michael Egger off the curve founder, it can happen to anyone that you get liquidated if you put your hard-earned precious assets on a liquidity pool such as a money market, or you put it in a Trove or a Vault and mint a CDP. So my thinking was essentially that there are people who are having a dilemma between staking and earning yield in other ways, and people who want to borrow against that position those assets. They can't do both at once. They have to choose between the two, and they don't really like getting liquidated. And you see it with proof of stake systems like in Cosmos, where there are high percentages of stakers. And it's because they are happy to take the passive income, but it's kind of locking up liquidity that could be helped both to enable them to do more with their assets and also help the platforms themselves and the ecosystems themselves. If you look at some of the platforms that do exist already in CeFi, they almost import some of the problems from TradFi. Like Nexo, for example, rehypothecates users. I'm not saying anything bad about Nexo. It's a very useful platform and tool. But we saw what happened with Celsius. We don't want to be seeing that in DeFi, and we want users to be able to get the best of everything. So our kind of motto is you want to be able to stake your crypto and you want to be able to spend it as well. So how do we do that? The solution is to allow users to deposit their assets in Amulet smart contracts and get a 50% loan upfront in a minted synthetic. The synthetic is available then to do whatever you want with. But in the meantime, the assets are deployed cross-chain using smart contracts to earn the yield on the host chain, if you like, and those yields in time are used to repay the loan. So as the loan automatically repays itself, a user can then choose either to draw a fresh loan, or they can unstake and take their collateral out if they decide they actually don't want to be staked any longer. And the best thing, of course, is that because you're getting effectively an upfront mint on your future yield, there's no risk of liquidation. Because essentially the protocol always treats the original as one-to-one with the minted synthetic. So you borrow an AM atom and it's treated as equal with one atom. The assets we're going to be enabling to start with are on the interchain. So that's the whole of Atom and Neutron's entire sort of connectivity. But we are also looking at enabling other compounding strategies such as WST ETH, where we'll be able to target the rebasing of those assets and allow users to get their loan up front of their rebases. And essentially, whatever asset you choose, as long as it has a sustainable yield, that strategy could potentially be enabled with the approach that Amulet takes. So we're looking at future deployments rolling out on other chains that are similar to the interchain, such as Solana and Near, which are also built on Rust, and also looking, bigger picture, what potential there might be for potentially the rails in Bitcoin DeFi, or obviously other chains as well on the EVM. The important aspect to us fundamentally is to have an incredibly enjoyable and efficient user experience with all the hard work done under the hood. And a lot of what we've been able to do is based on what Neutron has been able to do with enabling users to cross-chain stake from one chain onto another. At the same time, Amulet has built an entire custom set of code that allows users to mint these loans, and then the aim after that is to let users do whatever they want to be able to do with them. And our vision really is that instead of having to choose between, say, staking your atom and spending your atom, you can stake your atom and spend your AM atom. So our view is that this is a strong product market fit. We've seen so many users choosing to, for example, swap into LSTs to try and grab their yield and their principal at the same time, or split their yield and their principal at the same time. But what people can't really do is leverage their yield easily and spend it, as well as not risking their precious assets. So we also are looking at very much strong partnerships and strong infrastructure. We're building on the most solid infrastructure within the Cosmos Hub, because Neutron is essentially secured by Cosmos Hub's $2 billion of security. And we're also looking longer term at looking at all sorts of integrations with, for example, money market protocols. If say you want to take your AM asset and you want to mint a stablecoin against it on a CDP, we're talking to all kinds of different providers as to how we can make that happen for users.
Hey, Robin, we're gonna have to wrap it up here.
Yeah.
Sorry, kind of.
Sure. I will summarize. Of course, I'll summarize very, very quickly that we're live on testnet. We've been live on testnet for a few months, but we've just gone into our final audits and we're rolling out onto mainnet within a month. We have a team of very passionate DeFi builders that I can happily talk to anyone who wants to talk about where we're from and what we're doing. And finally, I just wanted to mention that if you try out our testnet, then you can potentially get some rewards, put it that way, especially if you give some feedback. So I will wrap it up there. There's quite a few more slides that I can talk through, but I'm happy to take any questions. And of course, anyone who would like to have a demo, please do get in touch.
Awesome. Because we were a little bit, I was a little bit liberal on some of those earlier discussions. We're running a little bit short on time, so maybe we'll have just one or two questions for Robin. But of course, if you're interested, you can always book a meeting with her and the team to discuss further. So Ben, why don't you jump in?
Yeah, thanks for a good presentation. How do you think about liquidation protection? Have you thought about implementing any like unwinding strategies like DeFi Saver or things like this? Obviously, that's going to be important for sophisticated deployers.
So the actual thesis of Amulet is you don't need to worry about liquidation if you're deploying directly your assets on Amulet, because all assets that are deposited, you mint a loan that's treated one-to-one with the collateral. So it's never going to be treated as worth more than collateral, requiring the collateral to be liquidated. In terms of working with partners, we're talking to various money markets and so on, where of course there might be liquidation issues, but that's kind of a secondary market issue rather than an Amulet market issue. There's also a product map along the way for potentially using stablecoin lending markets, and we'll definitely look at those issues then, but it's a bit early for that, for what we're doing right now.
Okay, thanks.
Awesome. So yeah, reminder, Amulet is available for meetings, and we'll wrap it up from on that one now and go to the last presenter of the day, RWA Trade, real world asset exchange based on new liquidity and tokenization models.
Hey guys, let me share my screen so you can bear with me. Right, can you see it?
Yep.
Okay, cool. So basically, my name is Yoda. I'm the founder and the CEO of Real World Asset Trade, which is the first of its kind, new type of an exchange for real world asset based on new liquidity and new tokenization models. Just to give you their main problem in the industry right now. So everybody understands that there is hundreds of trillions of dollars in real world asset that potentially can be democratized if they will be on-chain. And the approach that everybody is taking right now is by trying to tokenize those assets. And the problem with tokenization, those of you that understanding the in and out of that, is that number one, it's turning that asset to be in a security, meaning that it's not be easy accessible for the mass adoption. It will be limited to accredited investors. We're going to facilitate that. We will need to have a license as a broker dealer. Also, by tokenize that, wherever going to buy it, we're going to have a high risk of centralization because it cannot control the underlying asset. And you also need to have an issue with liquidity. Because if you have, for example, a building, and I want to buy a fraction of the building and spending $10,000 to buy that fraction, now, if I'm not sophisticated, I don't know what I'm buying. So I need to be kind of a sophisticated player in order to underwrite the building. Sometimes to underwrite the building requiring a lot of knowledge and also cost to do appraisal and other stuff or other checkouts, which can cost more than my fraction cost. So in other words, even if sophisticated player only playing that game, which is limit the market eventually, then building will not be going to have a volume. It's not like a Bitcoin that have volume or other token in the market that have volume. Building, if you have 1,000 or 10,000 shareholders, how many shareholders are going to sell the share per year? Usually you're holding a building for 5 years on average. So you're going to have 1 deal, 5 deals, 10 deals. It's not enough liquidity to facilitate or to entertain someone to open an exchange to facilitate 3 deals a year. It's very low. And what we basically build and spend a lot of energy, 3 years of development, $2 million of cost. We build a new type of technology that will be able to be alternative to tokenization. And it's from security point of view, it's not someone take an asset and break it down to token, then sell the tokens. But instead, the way that it works is that a very unique protocol that allows someone to buy the asset and then even immediately sell it forward, but is not selling all of that, is selling part of that. So for example, if I have an asset and I can sell now 90% of that and hold 10. And if the next buyer buying it, he can sell 99% and hold 1%. The next buyer can buy it from him and sell 95% and keep 5%. So multi-level ownership, meaning that every time the building selling forward or the asset selling forward in higher valuation, then everybody on the chain unlimited get pro rata the share. And from SEC point of view, in the United States, and by the way, everywhere actually across the globe, as long as the seller is part of the chain, it's not a security. If I'm buying something and immediately sell it forward even for double price, I'm part of the chain. I'm a buyer. I'm not a broker dealer. And the second thing is that we build a new type of technology that is creating decentralized insurance based on quantum finance models that allow whoever buying the asset, doesn't matter what type of asset, it will have peer-to-contract liquidity 24/7, meaning that you do not even need a buyer counterparty to buy it from. So imagine if I take you back to 2017 when there was only peer-to-peer, you can only sell your asset forward if there is a counterparty versus 2019 or 20 that DeFi AMM introduced peer-to-contract. So suddenly you have a DeFi in the space. So what we build is a new type of protocol that allow you to basically exit from your asset, doesn't matter which one it is, even if there is no buyers. Right? It providing 24/7 liquidity. Another thing that we created is basically a protocol for loan. You don't necessarily have to sell your asset. You can engage with 100% LTV, and which will allow you basically, I'm ahead of my slide. It will allow you basically access to 100% LTV minus basically the protection value and stuff like that will protect the asset. But in general, you can have 100% LTV of the asset 24/7. There is no DAO, no SHMAO, no lenders, no nothing. It's an inside protocol that allows anybody for any asset that is under protection of that protocol to get 100% LTV. And then that can be used, by the way, as a leverage, meaning that if you're buying an asset and you can borrow against that 100% LTV minus deductible fees and stuff, then you can use the leftover, which is, let's say, 90%, 95%. You can use it to buy another asset and do it again and leverage that. So it's kind of a leveraging alternative to even option models. And last and not least, we also develop basically alternative for an escrow model, meaning that if you want to, let's say you have $1 million or $100,000 or even $10,000, and there is many assets out there, but you don't know if the seller going to accept or not going to accept your offer until the closing, or your offer going to accept or not or deny. You do no longer need to deposit money in intermediate player or smart contract and have missed opportunity and pay gas cost and pay fees. There is a new quantum model that allow you simultaneously basically to hold the money self-custody and spread unlimited offers simultaneously. And the moment that one of them get accepted, the rest of the offer disappeared, and then you only then use the money and move forward. We work with a lot of over the years.
I've given you a couple extra minutes here. Probably have to wrap it up here.
Sure.
Go ahead.
So we work with a lot of advisors over the years in that, and we are a very feasible team that been there, done it for many years and know what we do. That's all.
Fantastic. Awesome. Any questions for Yoda and RWA trade? Maybe I didn't have to cut you off after all. How about any feedback? Anyone at all?
Yeah,
go
I think
ahead.
like
Yeah,
logical order. I think like there could be some improvements in the logical order, like building up the storyline so that it's easier for a viewer to kind of fundamentally understand the journey from an end user's perspective in logical order, why they would do certain things. So some of the order was a little bit confusing, although I find it fundamentally interesting. So I'd love to dig in more and understand more.
Awesome. All right, well, I guess we can now I always feel bad when there's time at the end left over and I cut some people off. I'm always like, oh man, I could have left some people a little bit more room to chat, but I guess we can wrap it up there. Thanks everyone for participation.
So maybe just to mention one point before we wrap it up. I didn't have many questions from other people, so I hope to get it there. What we are looking for is basically people with connection. We do not want to take our technology to the market by ourselves. We rather to partner with someone that is very strong partner, like joint venture, partnership 50-50. And if any of you have the skills and the ability to basically partner us with the right potential partner, we're offering a board seat with $1 million equity in the new company, just for help us to get through that gate.
Are you interested in the Dubai market?
Yes. So basically, I'm more interested in a big player that already have the go-to platform and the megaphone. And I don't, because we are not in the marketing space. So if you give me $1 billion, I don't know how to spend it correctly to gain our end user. But if there is a player out there already with the megaphone and the platform, I'm willing to give half of our portfolio and our basically assets in order to find the right partner to be a win with.
All right. Okay. I have a friend of mine who is he works in the government in Dubai, and he wants to introduce the RWA, not even the platform, but the platform behind the platform to like charge fees and regulate things, but allow multiple RWA platforms to live on top of that. Like,
and by the way, we are Sharia compliant with what we built. We built it as Sharia compliant, so it's also fits.
Okay, cool. I got your Calendly link. I'll pass it on to my PA and we'll figure something out.
And by the way, I know that some of you have a strong relationship, so I would love to jump in and show what else we have that you can help us out and get a board seat with an equity on the ground floor. Miko, I know that you are very well connected, and we have some stuff that I didn't want to bring in that here because we don't have time and I didn't want to abuse the platform. But we have stuff that you would like and want, and I would love if you can jump on call just to take a quick look and see if you can help to facilitate the deal to your friends.
Fantastic. Look at that, making magic happen. Awesome. So we'll wrap it up. I'm gonna petition humans for, I think, like a little roundtable discussion between Miko and Ian, maybe some other founders as like more of an educational kind of angle. Could be pretty interesting, I think. Something to be said there. I think it'd be pretty interesting. I'd like to listen to it, and I'd even volunteer to moderate as well. But why don't we wrap it up there? Thanks again, everyone. It's always great to see everyone here at these human events. I always learn a lot. It's great to see the founders. So I'll let you guys get back to your work day and look forward to the next one.